Welcome to Markets Now. I'm Michelle Rourke with Matt Bennett of agmarket.net. We're seeing some higher prices in the grains after the December WSDA report released at 11 o'clock today. And obviously, the big shocker here, Matt, was corn. We did see ending stocks pulled down 200 million bushels. Did you anticipate that big of a cut?
No, I didn't anticipate it, and quite frankly, I don't think anybody else in the trade anticipated it either. But at the same time, it sure looks like it wasn't much of a shocker because you come in here after a 200 million bushel drop when most were expecting somewhere between 50 and 100. And the market only rallies 2-3 cents right after it was released, and 4 cents, I think, for most of the time since we've seen the report. So really isn't a huge move considering that big of a drop. I think you could make pretty darn good case for exports going up 150. As far as ethanol goes, I think it's a mixed bag. Ethanol grind's been fantastic over the last few weeks, but seen a little bit of a slowdown here over the last week or so, and we're hearing maybe some more slowdowns ahead. So, maybe that ethanol number has to actually go back down later. I'm not sure. But exports, there's probably still a little more meat on the bone there if we continue to see in the sales that we've seen here lately.
Yeah. Maybe a little bit of a surprise that USDA didn't slow play some of the demand adjustments just because we've been hearing so much about exports being front loaded in anticipation of tariffs.
Yeah, I mean, we've heard that for quite some time here. And it's hard for any of us to know. I think the threat of tariffs and the actual institution of them, of course, are two different things. Whenever you look at Mexican business, it's just been fantastic. We know clearly we can efficiently get corn to them through our rail system, and it's probably 9 times out of 10 going to be the cheapest corn that they can get. And so you've got to think that maybe Mexico was front loaded to an extent, but we still feel like they've got more corn to buy on further down the road. Haven't seen China in as far as buying corn. We've heard whispers that maybe they are, but at the same time, I think if you would add some of that to it definitely brings some fuel to the fire. But here's the thing, Michelle. You drop 200 million bushels. Now you're still at 1.738. And 1.738, unfortunately, is not bullish. It's I don't want to be bearish here. It's a supportive situation that we've seen unfold here. Cheap corn has cured cheap corn. Demand's been strong, but at the same time, 1.738 is a big number.
And so we probably, since we're trading on the top side of the trading range that we've been in, don't have a lot more upside here, you think?
I mean, it sure doesn't seem like it. You look at that 200-day moving average for March corn up here at 251. I mean, we're kind of banging on the door there. Since October of 23, we've only spent 5 sessions with any amount of time above that 200-day moving average. So we have felt all along, yeah, we could get above it, but we need something substantial to kind of push it. So we've got the demand going. Stocks are heading in the right direction, but really kind of need some sort of a weather situation to play out, or maybe some new demand we don't know about. Of course, that would be potentially China. If something like that would happen, I think you could push above that 200-day moving average. But as far as getting super bulled up in here, I think you got to be a little bit cautious.
Yeah. I will point out, though, that global ending stocks on corn dropped by 7.7 million metric tons. So at least that helps the cause a little, doesn't it?
Yeah, I mean, that definitely helps the cause. Clearly there's a lot to be said about it, though, because when you look forward to 2025, obviously the safety crop is going to play a big role in what we end up with. But the other thing is, most in the industry, in my opinion, feel like corn acres are going to be very stout this next spring. You look over at November beans struggling to stay above $10. That's been part of the reason that these corn has just struggled. I mean, there hadn't been any real reason to rally in here. And unfortunately, I think moving forward, you could see acres awfully strong, as you get into next year. So you drop global stocks a little bit in here, but I think that you're going to see a still burdensome supply over the next several months.
Although cash basis has still stayed really strong, hasn't it?
Yeah, it has. It's weakened just a shade in some areas, and I think that you'll see that as you get closer to January. A couple things that you come to mind: if the processor can't shake loose bushels with a strong basis level, somewhere in here in December, you're probably going to see some of these January contracts getting pulled forward. I think they'll open up for some January delivery, and with that being the case, I think some producers, of course, will reward that, try to get some bushels moving, and if they do that, basis is probably not going to appreciate much more. And I would certainly expect any further upward movement. You might see actually basis weaken somewhat.
Gotcha. So soybeans, ending stocks unchanged, 470 million bushels. We kind of expected that. The South American production was raised 1 million metric tons in Argentina. Any way you slice and dice it, though, that's a record crop down in South America, isn't it?
It is, and to be honest, you look at Brazil, and they could have adjusted Brazil up some. I mean, USDA's been a little bit low compared to some of the private estimates. We've seen private estimates into the mid 170s even,
Right.
and so right now the thing is for the bean market, you just haven't been able to find a good reason to rally. You need something. The last 2 years, of course, we've had Argentine dryness 2 years ago. Last year, you saw Brazil was dry. This year, you just don't have that. I mean, are we going to see a new seasonal form, if you will, this time of year? Absolutely. I think that it is something that you could see happen because you're going to be trading who's producing the most beans in the world. It's not the U.S. anymore. So we have to kind of understand how that works. But right now, there just hasn't been any incentive to rally because the weather has actually been quite admirable. They've been able to get through planting and good progress there for Brazil. Argentina's getting their beans planted with good progress and good moisture, both areas. So really, there's just not much to get too excited about whenever it comes to weather.
I got to ask you, though, if you have a record crop coming from Argentina and Brazil and you have talk of tariffs, is $10 or around that level for soybean prices almost a gift?
Yeah, I mean, I don't know if I'd even say almost. I mean, the thing is that you're looking at global stocks going up upwards of 30% over the course of this 2-year marketing window that the USDA likes to give us last marketing year into this year, just above 100 to 130 plus. So if that's the case, uh, Michelle, anytime you would talk about stocks going up of any commodity 30% over 2 years, you and I both know price action is not going to look all that great unless you just got incredibly increasing demand. That's not something that we actually see. I mean, China, of course, their demand's still pretty darn strong, but it's not growing like it used to grow. So at this stage of the game, you've got to think that stocks for soybeans are going to be burdensome, not only this year, but potentially next year. So unfortunately, it'd be pretty tough to think that $10 isn't a decent place to step in and maybe sell some beans if you're not where you want to be. I know that it doesn't sound good. I know it doesn't feel good after 12 and $13 beans the last couple of years, but unfortunately, right now the fundamentals would certainly point this market lower.
Yeah, and again, there's a lot of thoughts that exports have been front loaded here, just like corn, right?
Yeah, I mean, for sure. I mean, a lot of people feel that way. China, of course, was non-existent in this marketing year's export program coming into harvest. And then all of a sudden they just buy. They bought tons of beans. A lot of people feel like, though, that they're going to back that significantly lower, especially whenever you get into any sort of a tariff situation, first of all. And then second of all, of course, a big Brazilian crop. So there's no doubt that tariffs are going to play a role in this export business. We know that. The last thing that you've got to look at, though, of course, is the real versus the dollar, which that ratio is favoring the Brazilians about as much as we've seen in many years. And so, at this stage of the game, once those beans come online, you've got to think that they're going to be very competitive on the world market and make it very tough for anybody to do business with us, especially someone who's getting tariffed.
Yeah, and basis levels have already dropped there, I think, in Brazil. So we're already seeing it. We'll wrap up with wheat just quick. Not a lot of changes there either. 20 million bushel lowering of U.S. ending stocks. But frankly, we're sitting down here close to contract lows. And so that market really needs some help, doesn't it?
It does. The only help that it seems to get, over the last few weeks, of course, has been some of the unrest in the Black Sea region. But right now, there's not a whole lot of talk there. Anytime that you see wheat prices pop up, the Russians dump cheap wheat on the market. And so, of course, the Black Sea region type of conflict certainly would put you in a situation where you don't know if that wheat's going to be readily available like it typically has been. But yeah, I mean, this wheat market's in a tough spot, and you certainly aren't going to think we're going to rally it much on the U.S. situation. I think the wheat crop certainly went in dormancy in pretty decent shape. So I guess my thought process here is that it's going to be pretty tough to move this wheat market this time. You're going to have to get into a major weather issue somewhere for one of your larger global producers, whether it's Australia, of course, or the Black Sea region. Right now, Russian wheat doesn't look very good, according to private analysts, but it's still early in the game.
Yeah, and there's some conflicting reports. At least Russia has been denying how bad their crop is. So
Right.
I guess we never really know the truth, do we?
No, you never really know the truth. Yeah, you'll figure it
Okay.
out with price levels later on, though. That's for sure.
Very good point. All right. Thanks, Matt. Matt Bennett with agmarket.net. That is Markets Now.